We've got another $16 billion worth of goods imported from China here in the U.S. about to get slapped with 25% tariffs. With the S&P less than 1% from its record high, markets have been largely shrugging it off. Is that right?
I think so. I think the markets are taking the right view. At the end of the day, tariffs don't help anybody, and I think we will find a resolution. But before we find the resolution, we will heighten the tension up to the highest level we possibly can. But the markets are seeing through it, and I think that's the right call.
There's been a lot of focus that maybe we get some deals on trade before the midterm elections. Certainly that we've seen that with investors and in the markets. You think that's the case?
I think that's where we're headed eventually. Some sort of denouement that has to do with a negotiated solution. That said, I think there's a lot of near-term risk here. So tariffs in general are playing with fire because they're balancing a near-term gain for the U.S. economy and medium-term to long-term losses, right? So think about the steel tariffs, for instance. They've been in place for 2 months now. Any guesses how much we collected in duties over those 2 months? About $500 million after collecting zero, literally zero, for a decade. And so there's a bit of a short-term gain there. Of course, the medium-term losses, the hit to sentiment, the retaliation, the inflation, all the losses of those gains from trade that economists love to talk about so much, including myself. And so I think, it's a horse race between those two factors here. I think there's a legitimate case for trade tensions calming down before the midterm elections, but we're definitely not out of the woods just yet.
And Krishna, talking about the midterm election specifically, we had this too close to call election in Ohio last night. Are the markets factoring in what could happen if the midterms, say, the House swings in favor of the Democrats?
Well, I think the markets are certainly expecting the House to swing. At least that's what the consensus view is. However, I think the big part, the thing that the markets were hanging their hat on was taxes, and that has already gone through. And I think that is something that is going to be with us, and it'll take a lot. We'll probably have to flip the Senate to kind of go the other way. So I don't think that's very likely. At this point, though, markets are, I think, in a really good spot. If you took out trade tension, everything is working out right. Policy is very supportive. Economies are doing well. Earnings are really superlative. All around, we take out trade tension, and the markets are primed for a big rally.